Hello and a warm welcome. You're watching India Tonight with me, Jude Sanith, coming to you from our Chennai studios, even as my colleague Shibani Garrett joins you, as she does every night from our Mumbai studios. Now, our top story of the evening is not exactly a sweet one, Shivani, because ahead of festive season this year, consumers are in fact feeling the pinch of rising sugar prices. In Mumbai and Kolkata, for instance, the price of sugar has crossed 70 rupees per kilo. The government, in fact, has delinked ethanol as the reason for the supply shortage and has blamed low productivity and hoarding for sugar as the reason. So, Shibani, even as Diwali and the rest of the seasons approach us, are you going to be a little short of sweets this year given the high sugar prices across the country?
I'm so glad that I don't have a sweet tooth, Jude, but from cutting duty on raw sugar imports to crack down on hoarders, government has taken series of steps to ensure adequate domestic production. But what has led to India go from sugar surplus to sugar supply crunch? Are these steps taken by the government enough? Kuldeep gets us a report on this.
Well, the sugar prices have been increasing consistently, and in fact, as per the latest government data available, sugar prices have been seen at 70 rupees per kg in Bombay and 71 rupees per kg in Kolkata. If we talk about the last week, so sugar prices were at 54 rupees per kg in Mumbai and 59 rupees per kg in Kolkata on August 18th. So within a week, there has been an increase of 29.6% in the prices of sugar in Bombay. Well, as we know that the government has been taking multiple steps to control prices of sugar. In fact, the government has tightened the stock holding limit, and it has also approved duty-free import of 1 million metric ton of sugar. And in fact, a latest order has been issued by the government, and as per the latest order, there has been some changes in the sugar import, in the import of raw sugar. Now, as per the revised order, the imported sugar has to be refined within a time period of 2 months, and it has to be made available for the sale in domestic market within 2 months. As per the earlier order, the requirement was to make refined sugar available for sale in the domestic market by 31st of the October. Well, we also learned that the sugar mills have started, have planned to start crushing in mid-October, so that the sugar stock for the month of October could be raised by nearly 10 lakh metric ton. And as per government and what ISMA told yesterday, adequate sugar stocks are available to meet the domestic demand. And in fact, as per ISMA, the closing sugar stock for the current year would be nearly 36 lakh metric ton.
Well, Kuldeep, they're bringing us that all-important update on what India's sugar situation is pretty much like at this time and place. But the questions remain, is sugar and sugar prices more specifically all set to leave a bitter aftertaste, or will the government's contingency measures pay off? To throw some insight on these questions, I'm now joined by a panel of experts. Anuj Gupta is a SEBI-registered market expert. We're also being joined by Deepak Balani, Director General at the Indian Sugar Manufacturers Association. Mr. Balani, if I could start with you, sir. Firstly, thank you both gentlemen for joining us on India Tonight. Mr. Balani, if I could start with you. It wasn't very long ago that India was in fact a sugar surplus country. What changed dramatically so quickly that prices have gone up and there is a very real supply crunch that's got the centre intervening to ensure that sugar stocks are readily available? Mr. Balani.
Thank you, Jude. Thank you, Shivani, for having me in your program. First of all, I want to make the things very clear. We are still a surplus country. As basically in a press conference, we have said that we have been consistently producing more sugar than what we consume. And only after the consumption and after diversion, we also have a sufficient buffer stock. So this entire rally in last 20 days should not be linked to the supply deficit. The market fundamentals are still very strong. What perhaps led to this unnatural increase in last 15 days was one, that the kind of production which we had expected in 25-26, the production was a bit lower than the expected because of the certain weather-related phenomena in UP and early flowering of sugarcane in Maharashtra. Secondly, there was an impression given that there is some tightness in the market, which led to speculative buying, a panic buying in the market ahead of the festive season. And what we saw that normally the consumer, the bulk consumer specifically, who normally stock for 10, 15 days and work on a just-in-time kind of a philosophy, because of the speculative buying and a kind of a message in the market like there's a tightness, they started buying for 1 month, 1.5, 2 months, which led to sugar lying in the stock rather than being in the domestic market, which led to the price increase. But having said that, various measures which the government has taken in last 10, 15 days has led to decline in the prices. I must tell you here that contrary to your report, I think today the market's ex-bill prices have gone down substantially, and it has gone down to the level of almost 53, 55 rupees kilo, which is substantially down from the last week, which was almost 65 to 68.
Right. Let's get also Mr. Gupta's inputs over here. Now, parties like Congress and AAP are actually arguing diverting sugarcane towards ethanol production under the E20 fuel policy. Government response is, of course, delinking that, from the E20 policy. And then, Ministry of Consumer Affairs and Food and Public Distribution is saying that there are multiple factors. There is, of course, it's caused by the red rot crop disease, weather anomalies like the El Nino effect, and of course the rising festive demand. And all of this has led into the sugar price spike. Also hoarding by local stockists is one of the reasons which is being cited. Now, who is to be believed over here, Mr. Gupta?
Hi, good evening. See, every time and the time of festival, there is a phenomena that people are holding the sugar. So there is a general thinking, but this time I can say that the ethanol is not only the reason, because if you check the data in 2023, 22, 22, 23, there is a 12% sugarcane used for the ethanol, but this time only 9% sugarcane used for the ethanol. So there is a clear that there is a no such kind of big consumption of the sugarcane for the ethanol. The second thing is that if you check that there is a global sugar production decline, the deficit of the sugar, almost 33 lakh metric ton. That's why we have seen that the price of sugar in international market increased from $474 per ton to $552 per ton. It means not in India, as well as the international market, sugar price have gone sharply. So it means there is a no big reason for the domestic side, but there is also a reason for the international side towards the production. And also there is some disease kind of thing which affected the sugarcane production and the flood in many production area. So these are the few reasons which led the sugar price on a higher side. But I am expecting that in a very short run, the price will settle because the government takes some measures to control the prices.
Right. Thank you for breaking that down. Let's just hope that things actually move forward, Mr. Gupta, and there is, of course, some benefit of the government trying to intervene with regard to pricing itself. But Mr. Balani, coming back to you, I'm sure most of our viewers are curious, as am I. With the centre actually ruling out ethanol diversion as the reason for the spike in prices, could you help make sense of that, really? Surely, while the government wants to say it is delinking the effect of sugarcane with regard to ethanol production, Mr. Gupta also mentioning that's only a 9% allocation that's been seen for ethanol production. But the fact is, can ethanol production genuinely be separated from sugar availability? I mean, at the end of the day, they're both competing for this from the same sugarcane feedstock, right? So how can delinking from ethanol actually be, a rational explanation as to why one has no effect over the other, Mr. Balani?
Yeah, primarily, let me give you the right perspective. One is that both are not parallel. The priorities of the government is very clear. The first priority is to take care of the domestic consumption. Only after we have taken care of the domestic consumption and after keeping a sufficient buffer stock, then the diversions are decided. And only after diversion is decided, and if there is any leftover, the government normally allows the industry to export some quantity. So this is a very, very logical priority which is given by the government. So it is not food versus fuel, it is food and fuel. And having said that, even after, for example, diverting almost 29 lakh tons sugar to ethanol this year, as I said, we will be closing the season with 35 lakh tons on 30th of September. That means for October month, 15th October, we will have the new crushing season starting. We will at least produce 10 lakh tons in month of October. November, the entire season will be in full swing. We will have at least 40 to 45 lakh tons production. And what we need is only a month of consumption, that is what buffer. But the consumption for October would be around 24 lakh tons, and we will be be starting October with 35 lakh tons plus 10 lakh tons of production in October. So where is the scarcity, and how do we blame ethanol? Because the data doesn't say so. The data is very clear that even after everything, we have sufficient stock. Having said that, as Mr. Gupta also said, that at one point of time, sugarcane was the main feedstock for the ethanol. The sugarcane was giving almost 80% of the total ethanol requirement. That has come down to only 25%. So out of 1,200 crore liter, which is required for 20% blending, the sugarcane sector is only giving around 290 crore liter. Most of the feedstock is now coming from grain, which is the maize and the rice. So it is perhaps not correct to blame ethanol program. I believe the price has also taken into account various other issues, that the perception which was given, the hoarding, and also it has taken into account maybe the factors of El Nino in the next season. Perhaps there is no evidence of any impact on the crop for the next year. But I think since we have seen that El Nino is affecting most of the countries and productions across the globe, and as Mr. Gupta said, that is also evident in the international prices of most of the commodities.
Right, right. Now, help us understand, the export ban horizon, Mr. Balani over here. Now, India has strictly restricted sugar exports over here to protect the local supply. How can, the country maintain this, without losing out permanently the market share to, let's say, rivals like Thailand or Brazil for that matter?
See, we are the second largest producer of sugar in the world.
Right.
And we are the largest consumer of sugar in the world. So first of all, we have to take care of our own domestic consumption, and followed by the ethanol diversion. As I said, exports come as a third priority. So only after both the things are catered. For example, last year we had a permission of exporting certain amount of sugar, which was restricted at some point of time when the government realized that the production is not going to be as expected. And naturally, because we want to save sugar for the domestic consumption and we want to keep sufficient opening stock for the next season. So we are not a country which we are regularly exporting. It depends on the production, depends on how much diversion we are doing. Primarily, the largest exporter is Brazil. They are the largest producer, but they don't consume so much. So they are exporting. Thailand is exporting. But since we are the largest consumer, we have to first look at our own priorities. And ethanol program, has brought in so much of benefit to the entire ecosystem, including the increased payment to the farmers and, replacement of imported crude. So I believe the priority of the government is domestic consumption and then ethanol. So export is not at a high priority every year.
Right. Mr. Anuj Gupta, coming back to you, sir, I think the one light at the end of the tunnel is simply the fact that there's new stock that's all set to hit the market in mid-October, when the season is well and truly upon us. But I mean, the question is, coming back to the price-specific aspects of what we're seeing, in your reckoning, how much could retail prices of sugarcane rise before that new stock actually hits the market and takes form and shape, especially in bigger metros like, let's say, Delhi or Kolkata that are already seeing the brunt of price rises? Do you see retail prices continue to go up before the new stock hits, Mr. Gupta?
See, as I said, that this is a general phenomena at the time of festival. Generally, traders or millers or the consumer hoarding the sugar for their consumption, and even the marriage season is also coming in the coming time. So that will impact on the sugar demand. But yes, I'm not expecting so much sugar price rise from here, because new crushing season is going to start in next couple of months. So that will impact on the sugar supplies. And also there is some measures which is taken by the government, like to import sugar free duty free sugar. And also there is some stock limit on the sugar. So I'm expecting that sugar prices will come down, and the supply of sugar from the hoardings perspective, it will increase in the market. So I'm not expecting so much rise sugar price from here.
Now, from the production perspective, let's go over to you, Mr. Balani. Now, there were two reasons, of course, cited by the ministry: the red rot disease, which severely damaged, in fact, the crops, and of course, the El Nino effect. And sugarcane, in fact, is a highly water-intensive crop as well. So, how can these things be factored in, let's say, for further contingency plan going forward?
See, basically, government has said, and we are also of the view that the production was hit in UP because of the red rot disease in most of the part. 238 was a variety. At one time, it was a wonder variety. But eventually, because of the overuse of the variety, we saw red rot affecting the crop, and thus the yields were largely affected. And same because of the weather phenomena in Maharashtra, extended cloud cover, extended monsoon last year. We saw that it resulted in early flowering, which actually led to stunted growth and early harvesting, affecting the yields. So primarily to make sure that such things don't happen in future, we have to come with new varieties, more pest-resistant varieties, the varieties which have better yield, which have better recovery. And in that sense, Agriculture Ministry, they have institution like ICAR. ISMA is also working with them, and we are trying new varieties. And we're happy to inform you that I think government will be releasing very soon 2 or 3 good varieties with better pest resistance and better yields. Having said that, we have requested government to start few activities and also have some center of excellence where we can have better varieties in terms of using a new technology, innovation for genomics and phenotyping, so that we can have better varieties released for the farmers as soon as possible. It is also very important that the quality of seeds which are given to farmers are of a high quality, so that all these issues like red rot or top borer or, for example, lower yields, lower recovery could be mitigated. I think the entire system is working on that, and to make sure that in future we can definitely mitigate and improve the yields and recovery, and we can get better sugar production out of our sugarcane harvesting.
Thank you so much, Mr. Balani, for your inputs, and Mr. Gupta for joining us today on ET Now. I'm afraid due to paucity of time, we'll have to wrap up this conversation.
Thank you.
Well, now moving on, RBI is out with its August bulletin, which highlights the resilience of the Indian economy amid continued global uncertainties. We have, in fact, Anurag Joshi with more details on this.
The Reserve Bank of India has released the bulletin for August, in which it has made some key comments in the state of the economy section. Key among these are that the headline CPI rose fractionally and that the core inflation remains stable, and the recovery in the southwest monsoon in July was partly offset by easing farm sector risks, and the offshore capital inflows have rebounded and reinforcing the external sector. The Indian economy has demonstrated resilience amid the ongoing global headwinds, and the global economy is confronting continuing trade-related uncertainties. The global economy confronts the fragile geopolitical environment also. Now, if the net FTA in June was inflows of $1.3 billion, and this compares to $100 million of outflow in May, and there was a net inflow of $2.3 billion in June 2025. Net FDI inflows rose $7.9 billion in the Q1 of FY27 versus $4.8 billion a year ago period. The RBI net purchase in the USD in the currency markets totaled $561 million in June. This compares to $6.1 billion of sales in May. The RBI bought $2.94 billion and sold $2.94 billion in the currency futures market in June. So net did not buy or sell anything in June. The RBI policy steps have led to a surge in the FCNRB deposit flows between the June 8 to August 21 period, which saw flows of over $65 billion. The FCNRB scheme is open for deposits until August 31.
Well, thanks, Anurag, for that all-important update. But on that note, we're slipping into a short break. But don't go anywhere because India Tonight will be back in just a bit. So keep staying tuned to ET Now.
Welcome back. You're watching India Tonight. I'm Shibani Garat, joining you from Mumbai, and joining us from Chennai is my colleague Jude Sanit. Now, ahead of the Xi Jinping's visit to India next month for BRICS Summit, National Security Advisor Ajit Doval held special representatives talk with Chinese Foreign Minister Wang Yi on India-China boundary question and improvement of relations between the two countries. These talks are being seen as a big leap towards normalization of ties between the two Asian powers. Of course, there is a lot of focus on the talks right now between Ajit Doval and Wang Yi, Jude.
The key focus, with regard to the talks itself between both Doval and Wang Yi has been the decades-old boundary issue. In fact, the relationship between the two countries nosedived after the infamous Galwan clash in 2020, and with talks resuming in Beijing, now the stage seems all set for global realignment. What is that all about? My colleague Sumita brings us a roundup of what to expect.
That's right. Ajit Doval, India's NSA, is in China, and he held talks with the Chinese Foreign Minister Wang Yi. Along with that, he called upon the Vice President of the country, Zheng. And remember, this visit is of significance from a multitude of viewpoints. Number one is the fact that this is the SCO summit, which is slated to happen in Bishkek in Kyrgyzstan, where it is expected that Prime Minister Narendra Modi, along with the Chinese President Xi Jinping, both the leaders are expected to attend. They could possibly also meet on the sidelines of the event. And then it is also expected that President Xi Jinping is going to attend the BRICS Summit, the Leaders Summit, which is slated to happen on September 12th and 13th. So, of course, this really lays the groundwork for talks between both the premiers to essentially happen. And, of course, while we talk about India and China and the boundary question, of course, the special representative vehicle, this mechanism has been created so that any issues that could be prevalent on both the sides, they can be addressed. Now, the last time when these talks happened in 2025, there was consensus which was built upon several aspects, but of course there is a long way to go as far as the border question is concerned. And of course, the MEA has reiterated that this border issue is of crucial importance, is of utmost significance as far as ties between India and China is concerned. And of course, this takes precedence over other matters, over other areas of cooperation between India and China, which is essentially, the reopening of flight routes, whether it's related to the Kailash Mansarovar pilgrimage restarting, or of course India easing FDI norms under Press Note 3. So all of that has happened. There's been an upswing in ties. However, there are some concerns which are pending as far as the border question is concerned, and of course those need to be addressed now as well as in future, and momentum should be there, should be maintained as far as the border question is concerned.
Right. So there are many questions that will be taking center stage during these conversations. In essentially resetting India-China relations is what we are discussing right now. We're joined in by Joyita Basu. She's the editor of the Sunday Guardian, and we are also joined in by Vivek Mishra, Deputy Director Strategic Studies Program at ORF. Let's go over to you, Mr. Mishra, first. Now, does this diplomatic reset actually is a genuine long-term stabilization for the almost 3,500 kilometer border that, India shares with China?
Thank you for having me. I think it's too early to say whether it's a stabilizing force behind the whole border question. Suffice it to say that not, much of the agreement, much of the border, and in fact, most of the border remains an unagreed proposition. So therefore, this is a good starting point in the sense, if you look at the context in which India and China have had difficulties in the recent past, especially since 2020, and the subsequent spiraling of the relationship. I think it's a positive start. We've seen some positive steps in narrative from both sides, both from China as well as from India, to be able to start this discussion on this very, very intricate issue. What I think is important is that this SR level talk is also particularly important because this dives deep into the border question. You're dealing with questions of delimitation. You have questions of patrolling. And so that suggests to me that we are moving forward in terms of border talks. Because, for a generation after 2020, we believed that the border question won't be resolved. So I think it's a positive start in the sense that we're diving deep into the crux of the matter on the border question. So from that perspective, it's particularly important. And obviously, it's bolstered by the steps that have been taken by both sides. For example, the press note 3, the investment sentiment, and the broader, Prime Minister Modi traveling to China, and then the possibility lurking in September for Xi Jinping, which is not yet confirmed, I must say, but a possibility nonetheless of Xi Jinping visiting India. So I think that sort of set of developments cushions the idea of the border talk, which remains very, very fraught at this point.
Right. Thanks for breaking that down and giving context to our viewers, Vivek. Joyita, coming to you for just a bit. It's been in the running for quite a while, would you reckon? Because I think the first signs of a thaw came, in fact, in the latter part of last year at the SCO summit, where both leaders, in fact, met amid talks of thawing ties between both India and China. Of course, the context then was different because this was at the height of Trump's reciprocal tariffs actually threatening to destabilize global economies around the world, India's included. So, but given the fact that you actually saw some thawing of ties there, both countries coming together, in many ways, this is a continuation of what we perhaps saw the first signs of in late 2025, Joyita.
Yes, it is. And the very fact that Xi Jinping is coming for the BRICS summit is unlike what happened in G20 when Xi Jinping did not turn up. That itself is a sign of thaw. But that does not mean that China-India relations are on... They are basically right now trying to stabilize the situation, so that things do not go out of hand. I would not even call it normalization, stabilization, because you see, when you're looking at China, what in fact the Indian side is talking about, the boundary question, the boundary problem has to be resolved. And what has China been talking about? The boundary problem will remain, but it can be business as usual. At the same time, if you look at what China has been doing, China has been pursuing a dual strategy while saying that, we can have business as it is. The things are okay with us. On the other side of the LAC, China, the military buildup continues. If you are looking at China's Tibetan theater, the Western theater, there is serious military buildup going on over there. And which country are they targeting? It is basically targeted towards India, and and you see, when you are looking at India's response also, the particular I would say standardization of the names of 27 places in Arunachal that came recently, it was actually a response to China's renaming of places in Arunachal. And the very fact that it came in the backdrop, the very fact that it is coming ahead of the BRICS summit, it shows that India is going to stick to its point. Fine, we can stabilize the situation. But when it comes to the border question, we are not giving in, which China wants us to do. One of the reasons why this thaw is happening is, of course, the Trump factor, as you mentioned. You see, and it is not just at that time. When ice broke first, it is continuing right now. Trump, in fact, Xi Jinping is going to the US towards, I think, 24th September after visiting India. You see, this is basically Xi Jinping trying to stabilize the India situation while he takes on Trump and the USA. But that does not mean Xi Jinping would like India to be another Asian giant in this continent. No, there is no place of India in that.
Right. Joyita Basu, you made some fair points, and of course, the friction remains live in the upper Subansiri region in Arunachal Pradesh. And you rightly pointed out that the 27 geographical features of Arunachal Pradesh, were in fact fiercely criticized by Beijing very, very recently. What others are, the lingering friction points, according to you, between the two nations? Ms. Basu?
Well, we may not see it as a friction, but the fact of the matter is that think of the trade deficit. Of course, there are things like the dams being built, that Brahmaputra, that side being dammed. And, China has a capacity is basically fighting a water war against us. Okay, so that is there. Of course, these patrolling points and all. But first, let us talk about trade. Think of the trade deficit. It is China's trade deficit with India in favor of China is only second to the USA. I think that is something like $112 billion or something like that. So what are we going to, if we have to resume trade with China? So you see, what do we do in terms of that? We have to think in terms of, we have to be very, very, I would say, strict when it comes to dumping. Number one. Number two, when it has to be like that, we cannot allow China entry in any of our security related areas. Simple as that. We can no longer have what we have had, Huawei and this and all these things. We cannot have. These are major areas. So this is just a first few steps.
Right. Right. Vivek, coming back to you, let's address the elephant in the room, right, Vivek? It's definitely troops and the presence of Chinese troops along the line of actual control. And this in the context of the fact that India has constantly maintained that peace along the border is absolutely essential for normal bilateral relations between both sides. And I agree that while disengagement may have taken place at several friction points, has there been sufficient de-escalation and reduction of troops along the border for relations between both sides to, I wouldn't say turn normal, but certainly improve? You can't quite help that without that absolute non-negotiable happening, a lot of this might well not happen or happen to the extent that we expected to, Vivek.
Well, I think China is one country that understands the language of force. And I think because it's the kind of actor in today's international politics, which of the kind of which there are very few. And therefore, you will have to incorporate the language of force when you talk with China. So I think maintaining the border presence of 60 to 65,000, whatever that the number is, I think was essential to convey to China that you're not budging from your point and you're not in a motion of retreat, while keeping the door open for negotiations. And I think that's the tactic that has eventually led to subsequent talks and China relenting, if you will. But there's no taking away from the fact that meanwhile China since 2020 and between 2020 and 2026, it has galvanized. It has galvanized the speed at which it's constructing military installations, etc., in the Western theater. But I think there are certain caveats. For example, if you look at the top 16, the Communist Party military sort of chart, you will see that most of them have been sacked by Xi Jinping, barring one or two. And if I'm correct, there is no general at this point to command the Western theater. So there are gaps, there are chinks in the armor of China, but nonetheless, it remains a behemoth that I think in today's international politics, countries will have to come together to deal with this problem. And I think you see that even in the case of United States, which is the preeminent superpower, that it has in fact let go of the Indo-Pacific strategy somewhat, and essentially saying to the other countries of the region that you need to take more burden on your shoulders to be able to form a strategy against China if you are, otherwise you are alone in this game. So I think that complication is also riding on the China question. And it is as true for India as for other countries, but truer for India because we face a boundary a disputed boundary with China. So I think all of those questions are convoluted in the questions of power, in the questions of politics, and the questions of a new belligerent state actor that China is today.
Also briefly going to ask you about, Mr. Mishra, about, the new world order, which you also mentioned with the ongoing West Asia crisis and how it has changed the game for even the powers in Asia, like China for that matter, given the most recent, sanctions that were being discussed, in fact, just a few hours ago. So, of course, China's relation with Iran and, importing Iranian oil for that matter. In that, who needs like a breakthrough more in this? Is it India or is it China? Given the new world order.
Oh, in this case, I mean, if you look at primarily the energy angle, it's China. I mean, India has more or less, if you look at the energy dependence vis-a-vis Iran, it has been bound up to a large extent, but largely through the Strait of Hormuz. Of course, it remains pretty dependent, India, as much as any country. But I think in the context of China, it's particularly important because there are two banks in China that are being talked about, the particular sanctions that Scott Bessent talked about yesterday. So there are particular entities in China that this time I think the United States is specifically targeting, or at least willing to target. They have demined the Strait of Hormuz. So if you consider the current scenario, I think China is the entity that is going to be hit hard. But let me caveat that by saying that if you look at the energy landscape of China in the past 1 year, China has done an enormous inner energy gamble, which means it has quickly turned around from external energy dependence to both energy, changing the energy mix in terms of growing reliance on the electric vehicles, and also using much of its reserve. Remember that China is a much larger country in terms of energy reserve as compared to a country like India, which suffers from the problem of energy reserves. So I think all of those presents a complicated question, but I think certainly if the United States is hinting, if the Treasury of Secretary is hinting at immediate sanctions, China is the biggest target at this point because it remains the largest country that is importing oils at this point, oil and other energy sources at this point from Iran.
Lots riding on that meeting then, and we'll be here to keep a close eye on it. But for the moment, Joyita, Vivek, thank you so much for joining us on India Tonight and breaking down some of these insights in the context of that all-important meeting between India and China. Thank you very much for joining us on the Bulletin again. Moving on with Union Minister Piyush Goyal in Japan, the minister in fact has noted down and mentioned how Prime Minister Modi has in fact taken a major step to address the concerns of Japanese companies. In fact, the minister said that the framework of sorts is expected to be created in exempting high-tech equipment from BIS certification. In fact, Mr. Goyal also added that he has informed the same to his Japanese counterparts, especially in the tech industry. In fact, Mr. Piyush Goyal also said that the Japanese partnership will help the Indian semiconductor ecosystem to grow up to $150 billion by 2032. Listen in.
We expect our semiconductor demand to now grow up to $150 billion by 2032. In design and engineering talent, India can offer significant support, as was mentioned by several of you. We are now rapidly expanding, particularly in the fabrication and packaging ecosystem. We have given significant government incentives. The Semicon 1 gave about $10 billion and has seeded investments of roughly $19 billion in this industry through 13 projects which have been approved. We have recently committed another $15 billion for Semicon 2 and are committed to giving even more once we exhaust this $15 billion. Apart from that, the states give incentives, and in the aggregate, we believe the Semicon 2 should be in a position to seed about $50 billion of investments.
Well, on that note, it is time for us to slip into a very short break on India Tonight. You don't go anywhere. We'll be right back.
Welcome back. You're watching India Tonight with me, Jude Sanith, even as my colleague Shibani has been with us through the program from our Mumbai studios. Let's quickly shift focus and take a look at how US markets are performing at this time and place. In fact, they're opening higher, led by technology and semiconductor stocks ahead of Nvidia's earnings, while investors also await key inflation data and the Fed's Jackson Hole communication for clues on interest rates. Meanwhile, oil prices are also easing as markets see a lower risk of an immediate US-Iran military escalation, although geopolitical risks remain as high as ever. In fact, gold continues to hold its elevated levels, supported by lower yields and a softer dollar. My colleague Sunidhi brings us this report on the US markets.
Right, so let's talk about the geopolitical developments driving markets today. US-Iran tensions remain in focus, but easing escalation fears and reliance on sanctions are taking pressure off oil and supporting stronger sentiments for US equities. Starting with Wall Street, US equities opened higher, led by technology and semiconductor stocks ahead of Nvidia's earnings and continued optimism around AI spending. Moving to the rates market, the 10-year Treasury yield is around 4.66%, remaining lower amid expectations of increased Treasury bond buybacks. The next major cues with this regard will come from the PCE inflation data, which is upcoming, and Fed Chair Kevin Walsh's Jackson Hole speech. Now, coming to oil, West Asia remains the key geopolitical factor. Brent is trending below $90 per barrel, while WTI is around $82 per barrel, as markets see a lower probability of an immediate US-Iran military escalation. The US is increasingly relying on sanctions and economic pressure rather than direct military action, easing near-term concerns around supply disruptions. However, geopolitical risks remain, particularly with China opposing the sanctions given its large dependence on Iranian crude. Finally, to talk about gold, gold remains elevated near around $4,600 per ounce, supported by lower yields, weaker dollar, and geopolitical concerns.
Well, thank you, Sunidhi, for that. Now, let's take a look at how the markets fared today. Nifty closed above 24,300 mark. Mid-caps gained while small caps lagged. Pharma, PSU banks and healthcare stocks posted gains, while private banks and metals corrected. Adani Enterprises and Max Healthcare were the top gainers in Nifty today. Now, my colleague Jude is going to get you like an exclusive conversation with DIPAM Secretary.
Absolutely. In fact, in an exclusive conversation with ET Now, DIPAM Secretary Arunish Chawla said that the government is in fact confident of meeting its FY27 divestment target. He also highlighted the 75,000 crore rupee dividend target that the government has its sights set on, with most of the proceeds expected in the second half of the year. Let's listen in.
Team DIPAM now has its own market research unit, its own operation room. Last year, we achieved more than 90%, almost 95 to 96% of our target, which was a very good achievement. And this year, the pace is so good that we are hopeful of now achieving it 100% this year. I think the total figure is now around 65,000 crores. And that is, we have still not ended with August. And Hindustan Copper will get added to it. So you will see that the first half itself will show fantastic results this year.
In a major policy push to expand India's indigenous missile manufacturing ecosystem, Defence Minister Rajnath Singh has approved the transfer of DRDO-developed missile technology to the domestic defence industry. The move is aimed at reducing import dependence, boosting local manufacturing and bringing more MSMEs into the defence supply chain. While this could open a larger opportunity for private defence companies, it would also mean greater competition for established players like Bharat Dynamics. My colleague Sumita gets us more details on this.
That's right. In fact, important news that's coming in from the Ministry of Defence, wherein Defence Minister Rajnath Singh has approved the transfer of technology of DRDO-developed missile systems to Indian defence industry. In fact, the production will be as per applicable qualifications, certifications and regulatory requirements. What this move essentially means is that now DRDO-developed missile technology will now move from government labs to Indian factories. And this will open up production opportunities for defence companies and MSMEs MSMEs. In fact, this will enable successful transition of missile system development to industrial production. And of course, this will give a further boost to domestic manufacturing of defense in the country. It will strengthen the country's defense industrial base and of course reduce import dependence and increase domestic value addition. And of course, there's going to be more participation from private sector. In fact, as part of this move, the likely beneficiaries from the defense sector are likely to be BEL, BDL, L&T, Paris Defense, along with Zen Technologies.
Well, thanks for that update, Sumita. But shifting focus to court action next, the Supreme Court has ordered former Tehelka magazine editor Tarun Tejpal to surrender within a period of 2 weeks. In fact, the top court's directions come after Tejpal himself had submitted a plea to the court asking for, to reconsider that judgment of 10 years of rigorous imprisonment. In fact, remember, the case dates back to November 2013 when a Tehelka employee had accused Tejpal of allegedly raping her in the lift of a Goa resort. The case, in fact, took a rather interesting turn in 2021 when a Goa Sessions Court, in fact, acquitted Tarun Tejpal, saying that the prosecution had, in fact, failed to submit evidence that would, in fact, have him convicted in the case itself. In fact, it was the Goa government that then moved High Court appealing for a higher degree of punishment for Tejpal itself, in fact, seeking an enhancement. The Goa government has now sought an enhancement of Tejpal's sentence to life imprisonment, arguing that even the 10-year rigorous imprisonment punishment was, in fact, inadequate given the nature and seriousness of the offence. But Shivani, it seems like Delhi seems to have had one rainy day after another, and weather doesn't look too great in the city.
Absolutely. Delhi is in fact witnessing heavy rain since yesterday, and as a result there was a heavy waterlogging in multiple places across the city, such as Baba Kharak Singh Marg, Hanuman Mandir Marg, ITO, and people face difficulty to commute due to the flooded roads. Now, IMD has issued red and orange alerts for heavy rain across the capital with a warning of moderate rain, thunderstorms, lightning and heavy winds. People are now advised to take proper measures in the future. Well, with that, it's a wrap on this edition of India Tonight, but we'll be back in fact, few moments on Business at 9. Thanks for watching.